Friday, a couple back-to-backs. Like I said, not something I typically do, but something we're going to do so I can get out the two per week. I'm trying to do two per week. Don't want to leave you guys flapping the breeze. Not that anything I have to say is what person should live and die by. But I want to give you an idea of what I'm looking at here. I've got readings from others that are putting stuff out into the marketplace and explaining what they think is going to happen. And then I'm looking back, we're going to go Friday to Friday on this one and see when you're looking at what guidance others were given, they're expecting to see about 0.5% in cost drop this last week. Like, hey, as things coming into the week, you're looking at what the guidance they're giving on August 8th up until it looks like the 13th, and then yesterday, and then they're saying, hey, we're going to see some things drop. Everything's going to get better based upon what was readings were coming out and all the analysts and what they were claiming was going to happen. And then you get what we saw today or this week with the producer price index and completely changed everything, right? Now today, now, it didn't even follow what they're talking about. Now, it's also changing. Everybody's guess is what's going to happen with the Fed rate cut. Well, it was going to be, everybody's hell-bent there was going to be September, we're going to get a rate cut for a full 0.75% for this year. Now, the chances, when you're talking about the betting scale, what are the odds? The odds it's going to happen now in October. So they're kicking the can down the path because now we have this inflationary environment. We have PPI doing what it's doing. We also have today retail sales came in a little bit hotter than what was anticipated. You've got import prices that are up quite a bit. In fact, industrial production dropped a little bit. Capacity utilization is up just a tad. Actually, capacity utilization is pretty flat when you start looking at it it's flat from what it was previously. Forecast was supposed to go up a little bit, but it came down just a tad from the forecast. And consumer sentiment is down just a tad. So that all being the situation, I think that they may just sit still, may kind of hold on it a little bit. Not sure what's going to end up happening when it comes to the market, but when it comes to what the Fed's going to do, but the Fed's not in the same position that they were just a little while ago to decide, we're going to drop the rates. Again, remember what happens when the Fed drops rates. Creates more inflation. It creates more inflation. It pulls people out of bonds, goes someplace else where they will make more revenue in an inflationary environment is to stocks and companies, not into bonds. Bonds is a long-term instrument that is impacted negatively by inflation. That's why I talk about pay your mortgage, don't pay extra, don't listen to the Dave Ramsey on your shoulder. You as an investor, don't do that. The average person who doesn't manage their money worth of shit, yes, do that. Get out of debt. Because it's debt to you, debt to that person. That's not debt to the real estate investor's greatest asset in your business, significant asset in your business. Now let's take a look at what's going on in the charts. So we did try and reach that. We never reached the block, right? We pulled back, which I showed yesterday, and we opened right on that same level, and we pulled back down. We tried to jump up, but we have this now, what was a support, became support here, now is a ceiling. We're in a ceiling. We're squeezing between these two. I think we're losing steam. We'll probably end up going back into this particular block here and start trading in that block again and following these patterns. Yeah, that's what we're dealing with. But right now, this may act as a floor. We may play in this space here, but this may be the space we end up working in right here between the quantitative easing block and the current block for our trading that has been established with this particular downward channel, this upward move. So that might be our sideways move for right now. So I don't think that you're really going to be in any bad spot if you locked or floated, because we're only talking about 43 basis points here. So it's probably when they actually run the tape and they get it printed out in a rate, you're probably talking about 0.3% in cost differential, whether it be the top of that range or the bottom of that range. So I'm not one that thinks that you should even worry about, do I lock, do I not lock? If you're closing the next 30, pull the trigger and just don't look back on this. Look forward to your next deal. Those who sit there and analyze, should I have locked, should I not have locked? Dude, you're worrying yourself about nothing, and Worry is basically praying for something you don't want. Remember that. That's all worrying is. You're praying for some shit that you don't want happening in your life. Appreciate you guys. It is August 15th. I'll be getting back to you from a different location on Tuesday. Appreciate you.